welcome to this week's edition of the Grand Gauntlet. I think it's been a couple weeks, but we've had some transitioning going on, and this is good timing because we got another USDA report coming up on Friday. And so I've got Hedge Plus owner Patrick Hayes here, ready to answer 5 questions, I hope.
I'm ready, and we've had fun the last couple of weeks with the rally, so it's awesome.
Yeah, for sure. All right, let's go. First question says, what do you expect from the USDA with this July supply and demand report?
The July supply and demand report, I think we're going to see a little bit of a drop in yield in beans, a little increase in corn. I'm based off a conditions report so far and the early planting. I think you're going to see demand go up in corn on the supply and demand balance sheet, and I think you're going to see supply go down a little bit in beans. I don't expect a surprise, but if we're going to get a surprise, it would probably be USDA ignoring current weather and saying that we got up to a really good start and increasing yields more than just a little bit for corn. Beans, I think they're going to have a very difficult time doing that. So I think at worst case, they'll leave yields alone for beans, and maybe a bearish report would be an increased number in corn yield. So, but I don't expect a big move. I think it's going to be more weather. You know, weather trumps everything. I think weather will trump everything very quickly after the report.
Okay. All right. Well, speaking of USDA and the current rally we've got going on, this one says, do you think the USDA is going to kill this rally with the report?
I don't think they're going to add to the rally. A surprise bearish report would kill the rally or make it much more difficult and increase the weather need much more. We got to remember, we're entering into a time after we get through pollination where the risk to the corn crop is diminished greatly, and we still got that risk right now. And then we're looking at a period of time where we have a tremendous amount of corn, and especially corn, but moving to market. Sabina crop last week was 30% harvested in the northern part of the country. They'll be done by the end of the month. They don't get rain. They have monsoonal rains. They're going to harvest that quick, and it's going to get to port. And with this rally, they're going to get to port that much quicker. That throws a huge crop, huge exports on the market. At the same time, where U.S. farmers are looking at clearing out 2 billion bushels of old crop. At the same time, end users know in September and early October, they got all kinds of forward contracting coming with corn. So what's the rush? What's the need to push prices higher for end users during the next month or two? We still have old crop. That's good until September. Old crop will have a very hard time rallying from here. New crop could rally if we have enough weather that's really going to significantly lower yields. To get old crop up, it would have to be end users buying ahead, and I just don't see that right now as an issue. Not with the amount of bushels coming to market.
Just real quick, the question that comes to my mind is we had June's report. 3 weeks later, we had the June quarterly stocks and acreage report. Now, 10 days later, 11 days later, we've got this. Is this typically a very impactful report after all that?
Historically, we have seen some craziness in this report because of early summer weather and yield expectations and changes. For example, the early planting usually adds a couple bushels above trend line. Trend line is 183. So weather can have an effect. Conditions can have an effect, and the USDA does look at that as potential yield, varying yield. So it can have a surprisingly strong effect. On top of that, you got to take into consideration, this is the first WASDE report after quarterly stocks. We got to put that number into our balance sheet for the WASDE. We had 600 million more bushels this year compared to last year's quarterly stocks. Okay. How does that play into the supply and demand sheet, the balance sheet? They got to add that in. They left acres pretty much alone, so that's not going to be a big deal. Sometimes it is though. Sometimes they drop to 3 or 4 million, and the WASD in July is crazy. This year, because there's not massive changes in the plantain tenders quarterly stocks, I expect less excitement. A little bit better demand for corn, a little bit less for beans, and yields touched up a little bit. That's my expectation.
Okay. All right. This question says, how far do you think weather can take prices if this current weather threat turns out to be real?
Well, the current weather is real. I mean, we're having some heat, and we got places with dry. How long it lasts is the question. How much rain comes through is the question. Um, in 2012, no one expected it to be 3-4 weeks of hot and dry. It was, and finally in August that broke somewhat, but it was too late. This is a critical time for the crop. It needs a drink of water. It needs to have some cooler temperatures at night to really kick butt. We're going to probably lose some yield with this heat wave. No question about it. We're going to lose some yield off of what number? Going into July, were we at 190 instead of 183? And is that coming back down towards 183? That's the million or billion-dollar question, right? And how long it lasts will dictate how long prices, yields can fall, right? So we're nowhere near a completion on what the yields are going to be right now, not with pollination still to go. Once we get through pollination and then the reproductive stage in soybeans a couple weeks later, now we're taking a lot of risk out of the crop, and we'll have a pretty good idea of what the yield's going to be within a bushel or two for beans and within 5 bushels swing for corn. Right now, it could still be a 15 bushel swing in corn and a 3 or 4 bushel swing in beans.
Okay. I see the weather map you got behind you. This question says, which weather model seems to be doing the best right now, and what is it calling for?
I don't even know why they have any other weather model besides the European, because it's been by far the best for a pretty long time. I don't pay attention to anything but the European. The AI model that comes out is sometimes surprisingly better 2 weeks out. So I kind of like keep an eye on that for a little further out in the time frame, just to see if there's something that could develop. It seems to be a little bit better picking up things early. But the European model is by far the best, but all of them stink. Okay. You look at your 8 to 10, and then 3 days later, look at the 6 to 10, the 8 to 14, excuse me. And then you go to 6 to 10, and it should be the same forecast, right? But it's changed. I mean, they're pretty good at getting a general overall view of what the weather's going to be like up to a month. Where the rainfall hits, where the heat is within 1,000 miles, they have no idea. It varies too much. There are some big things that will lead to correlations, like that reverse C in the Pacific Ocean when it got cold water along our coast. Is a really good indicator of drought in the center, because it pushes high pressure further inland into the center of the U.S. 12, it was so dominant, and we had such a drought. This year, it's colder than normal, just not that dominant. So it's kind of in that iffy phase where we're having some effect because I think of the colder water off the Pacific. I don't think it's going to last. El Nino produces a lot of moisture in the air off the Pacific, and usually pretty quick jet streams. So I don't think this is going to last. I think we're going to have a really good crop, but I will ride this as long as we can. Let it ride for a while.
All right. Final question this week. This one's from prospective client, as says, how often do we typically get a bounce in August? Are we looking at a dead market through harvest if this current rally fizzles out?
It's a term. Normally, when we end the rally in the middle of July, we fall off a cliff and the prices collapse. Last year, for example, September futures, as an example, we rallied up 25, 30 cents to in the 440s, right about where this report is and just after. A month later, September futures, 368. It's a huge drop in a very short period of time. that has fallen off a cliff. That's what normally happens. And the reason is, in the corn market first and bean market second, you take the risk out. Once the reproductive stage is done, and if it's good, the baby seeds are there, we're going to have, it's just a matter of fill, and it takes a lot of risk out. So once risk is out, end users that know that they're going to have enough bushels, especially with 2 billion bushel ending stock in corn, over 300 million in beans, that they're going to have enough to get to harvest. And once they know that, we collapse. We can rally if we have a major derecho like we did in August a couple years back through Iowa. We rallied a little bit for a little while. It has to be a pretty significant event, a very significant weather event or some kind of black swan to really reverse that trend. If you want to make money on a hedge account, the best time to do that is the most lucrative is mid-July to the mid-September and being short.
Yeah, I read that question, took it as a roundabout way of asking, maybe I should make some sales right now.
Yes.
Because it doesn't seem like August is typically a time where the opportunity is presented. So perhaps that's what he's looking for, and the insurance that this might be a decent time to make sales. At least, we're up to 50%. Maybe some people who are below that number might want to consider making some.
Yeah, if you're not caught up, I would catch up because we're down 6, 7 in corn right now. Beans are flat and a very close new crop to $12. I am really, really considering before the report pricing 20% more because guys like to not have a whole lot of beans to store. And then look at harvest lows to buy back beans like we did last year where we sold a put out in March or May, and we added 40, 50 cents on an option that was really not ever at risk after the lows were put in the harvest. So to add 30 or 40 or 50 cents and have that ability to do that at a pretty low risk probability at harvest lows, $12 would be a hell of a sale. So
Yep.
We're looking at making a sale in beans for sure, get to 70%. In corn, I think we're going to be at about $5 next spring. So I'm not selling any more crop until we get a really good price because we're 50% priced at $4.93. It's a nice luxury to have.
Yep, absolutely. All right, well, great. Thank you for the questions, everyone, and thank you, Patrick, for the answers. Hope everyone is getting the rain they need. Maybe just not so much elsewhere around the world, but as long as we can get some good weather here and hopefully get a good crop for everybody.
Yeah, by the way, France is burning up. So yay, go France. 30% loss being reported right now. Let's take that crop down. The French need to buy U.S. corn.
Start back Ukraine too, so it's
Yep.
moving east, and it's covering a lot broader area over there too. So yeah.
And El Nino's really bad for Far East, right? In India and Indonesia. That's where they have trouble because that's where they have the cold water and less evaporation. We should have a good crop. That's why I'm really hesitant on getting too excited about drought right now. Okay.
Good. All right. Well, thanks again, everybody, and we'll do this again next week.
Have a great week, guys. Thank you.